You gotta wake up to a world that's real. You gotta rise up and make it feel. Life in full measure is more than just pleasure. Wake up and live.
Hello and welcome. Today is Monday, November the 24th, 2014. This is Paul Sandhu coming to you with another episode of Wake Up and Live Radio. I have on the line today with me Dr. Jim Willie, editor of the Hat-Trick newsletter found on his website, goldenjackass.com. Jim Willie is, of course, a very popular guest on this channel and in the alternative financial news media in general. A lot of people enjoy his presentation and his deep analysis, so I won't go into a lengthy introduction since Jim has been with us many times in the past and most of my listeners are familiar with his work. So without further ado, hello and welcome, Jim.
Oh, good to be back, Paul. So much is happening. We're in the end stage here. We're seeing climax events and not being properly portrayed out there in the financial press, but it doesn't take too much to figure out what's going on, and it's really a desperation to keep QE going, the bond monetization, the rescue, the printed money to cover debt. I mean, where does a nation get off printing $1 trillion a year to cover its debt? This is what third world nations do, and that's what the U.S. has become.
Okay. Now, the dollar, of course, has been rising in the last little while since QE has ended, and it is being, heralded as a great success of the monetary and financial policies of the Fed and the powers that be that are running the U.S. and their system and their banking system and their financial system. So are you telling me that your opinion is different from what is being reported in the mainstream?
They lie about everything.
What about the end of QE? Did they lie about that?
Well, yeah, they told us about tapering of QE back in the summer of 2013. That was a lie. They've lied from the start, Paul. They lied back in 2009 when they said they're going to 0% for just a short period of time to kickstart the economy, but it didn't kickstart anything except maybe capital investment for business in Asia. Then they told us that QE would start with the unsterilized bond monetization to cover the U.S. government debt. They said that would be temporary. Well, it wasn't. I called the 0% permanent, and I called the QE bond monetization forever and to infinity. Well, they told us that there was an Operation Twist and the QE was really over with, but it wasn't. The Operation Twist was the Chinese switching from long-term U.S. treasuries to short-term treasuries. They wanted to run them out and let them mature. Then they lied to us and said that the tapering of QE would happen. That wasn't true. I called them liars, and by September last year it was proven correct. And then they said, well, we're going to resume, but we're going to cut the volume, and that's a lie. They're monetizing derivatives. They transferred some of the QE responsibilities to European banks, and they transferred some of the responsibility to Wall Street banks, which are heavily involved in carry trade, which means borrow the 0% money and invest in treasuries with futures contracts, the bonds, the long-term bonds, and earn a nice 25-fold profit on the gap, the spread, which is about 2.5%, maybe 3% if you count the 30-year. So they lie about everything. Now they say that QE is done. It was a success, but what it's done is raise the cost structure around the world, made permanent the recession. And what happened, I think, is that they were told by all the nations of the world, stop your money printing because you're killing the global economy. You're raising the cost structure. We're not seeing any kind of price inflation, any healthy growth in product prices. We're not seeing any healthy growth in wages for labor. So the U.S. Fed announced that their QE was a raging success, kind of like the end of the Vietnam War. Declare victory and go home. Except what happened here is you got to have continuation of the bond monetization because nobody's buying the Treasury bonds.
So how is it being continued?
Well, what they've done is they've eyed, the Fed and the U.S. Department of Treasury have eyed the $1.2 trillion sitting over in Japan for their government pension funds. $1.2 trillion. So they've told the Japanese, invest that fund in treasuries. And that'll buy the U.S. another year, year and a half, I don't know. So, we're running out of nations to plunder. We've plundered Syria, we plundered Libya, we plundered Ukraine and stole their central bank. By plunder, I mean steal the central bank gold in all those nations. We plundered Tunisia, stole theirs. We plundered Cyprus, confiscated money. Now we're turning to our allies and plundering them. Japan doesn't have the option to say no. But what's going on is that the Japanese pension fund, it's their government pension fund. They're postal workers, they're government workers, they're bureaucratic employees. They've got a gigantic pension fund, and it's almost all in Japanese government bonds. So I made the argument a couple of weeks ago in a public article, or 10 days ago in a public article, that if indeed the U.S. demanded that the Japanese convert their pension funds to treasury bonds and dump their Japanese government bonds, then they would replace them with QE. Now notice that as soon as U.S. announced QE is done, the Japanese announced unlimited QE. Well, gee, isn't that a clue?
It's just, can it be just a coincidence?
That Japan announced they're going to print $2 trillion a year, precisely when the U.S. announces they're going to stop printing $1 trillion a year? No, not a coincidence at all. So I reasoned that the Japanese announced their unlimited QE in order to cover their Japanese government bonds held by the pension fund so that their interest rates wouldn't skyrocket. They don't want that. And I said, all right, the smoking gun would be the yen. Let's see if the yen makes a move. It dropped 1% on a given day last week. It's down to 85. I know people, I get some emails once in a while, and they say, Jim, you got it wrong. The yen's going up. I said, no. The dollar yen is going up. The dollar in yen terms is going up. The yen in dollar terms is going down. The futures contract is always in the denomination of that currency. So the yen is down to 85 now. At the Fukushima event in 2011, it was 120. Just a few weeks ago, it was, see, I've got the chart in front of my face here. Just a few weeks ago, like in mid-October, it had rebounded from 90 to 94. Now it's all the way down to 84. It's gone from 94 to 84 in 1 month. Since they announced QE, unlimited QE, they've seen a rather significant drop of about 3 or 4% in their Japanese yen. So what we've done is we've raided the Japanese pension fund, ordered Japan to do unlimited QE because we're going to stop ours, put their entire financial system at risk. Their export trade is going to get a little push here, because if the yen has gone down, that means the Japanese Toyotas are going to get cheaper to North Americans.
Right.
And to Europeans. It means that Komatsu construction equipment is going to become cheaper in North America and Europe, competing against, say, Caterpillar.
Well, then it would bring inflation to Japan.
It's going to bring a different problem to Japan, because they're going to see problems with their banking system. Their banking system cannot take a yen disturbance like that. It's much bigger than that, Paul. The Koreans and the Chinese are not going to stand by and let Toyota and Komatsu and Fujifilm and all the Sony home electronics, they're not going to sit by and let Japan knock down by 5% their yen. It's going down to 80. It's going to go another 5 points in a matter of weeks here. Japan is not going to be able to do it without a response from China and South Korea. We're going to get a currency war out of Asia.
So the Chinese are also going to look for ways to devalue their own their yuan in concert with the yen.
Yeah, and the Korean won, WON, it will also, you've got Hyundai cars, LG Electronics,
Samsung,
right? So, we've got a great disturbance coming here. Imagine now the euro, the European leaders saying, we got to bring the euro down. How do you do that without pushing the dollar up even more? Push the dollar up even more, you're going to push down crude oil even more. Push down crude oil even more, you're going to have bigger problems for big oil, the big oil companies, Exxon, etc. You're going to completely wipe out the shale oil industry in the United States. I don't care about these arguments that shale's wonderful. I just don't buy it at all. You cannot start a currency war in Asia without having the entire world respond.
Isn't Europe already responding? I thought Draghi just said that they're going to do whatever it takes, and they're starting their printing presses.
Yeah, and Germany has said over our dead bodies. In other words, Germany is basically telling Draghi, you do it, and we're going to take some serious action. It's unclear what that serious action is going to be. My guess is they're going to foretell, Germany is, going to foretell of their departure from the Euro Monetary Union. So this currency war is going to cause a tremendous problem in Asia. At the same time, we have this tremendous conflict between the German central bank, the Bundesbank, and the European Central Bank, which I call Prince Draghi's court. You cannot, I keep saying that, you cannot have an Asian currency war without the whole world responding. You're going to disrupt the Japanese banking system. You're going to cause severe problems. I think you're going to see a small run at first, on the Japanese government debt, even though they're printing yen to cover it. Because they're printing yen to cover it. You cannot sustain a currency with a printing press. That's like a third world concept.
Zimbabwe.
Zimbabwe. The United States gets away with it, Paul, because we're the global currency.
Right.
Japan can't. They cannot do unlimited QE without killing the yen. So what happens if the yen is down 10% more in 6 to 8 weeks, and we're coming into January?
Right.
Well, Korea and China say, wait a minute, foul, stop this. And then they're going to start saying, hey, Japan, look, are you with us or are you not with us with the regional currency for Asia? Are you with us or not with us in combating the entire king dollar hegemony? No, we get tremendous problems coming because of the Japanese action for unlimited QE. You can't do that without enormous consequences. You can't do that. We've got confirmation that they are printing the yen to cover their bonds by virtue of the fact that the yen is falling. That's the smoking gun. I also noticed that there was an interesting phenomenon in their 2-year JGB, Japanese government bond. The yield went down, quite a bit on a relative basis, and the naive would say, yeah, but gee, it's under 0.1%. It still is. I don't care. I look at it relatively. The money went into the 2-year federal bond for Japan, their government bond in Japan. That's where the new money went in to save their skin, to prevent their interest rates from jumping up, 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 up. They've caused some tremendous instability in Japan's financial system. You can't do unlimited QE when you're not the global currency because you force all the players to get out of your currency. So you're going to get a currency war in Asia, and it's going to cause some unintended consequences for the uber lords in Wall Street. The central bankers are going to get a big whiplash. You know, they probably told the Japanese, oh, you'll get a nice big push from your export trade because the Toyotas, the Komatsus, the Sonys, they're all going to be cheaper and you'll be able to compete better. And the Japanese, if they're thinking at all, would conclude, well, yeah, but our partners, our regional allies in Korea and China, they're going to be in an uproar. Because you can't do that. So we got some tremendous problems because the United States and its central bank exported QE. We didn't stop QE. We exported it to Japan and commandeered their government pension fund, $1.2 trillion. Oi, oi, oi. We can't, the U.S. is running out of countries to plunder in order to sustain the dollar.
Yes, I was going to ask you, like, where do they turn to next? Because, as you said, that this is going to lead to, bigger problems because China cannot afford to have any more hits to its own export markets. And if even like, some of it shifts towards Japan, and a lot of countries would rather go to Japan because they're still known for better quality products and more reliable technologies. Therefore, it is going to have an impact all across the big export engines of the world, which is of course China and Korea. So yes, it definitely is not something that either one of those countries are going to desire. And
if I could just add, the Chinese, for their advanced industry, it's all Japanese.
it is all Japanese. I was reading about that the Japanese are down there. I mean, they are if it wasn't for Japanese technology and, the Japanese engineers and the Japanese expertise, a lot of this industry wouldn't exist in China.
Yeah. I'd like to point out, Paul, where the next trigger is going to come and out of Asia. I mean, not only is there going to be a currency war, but what the U.S. has started by demanding the Japanese pension fund of $1.2 trillion is they put at risk the yen. And by doing so, they put at risk the yen carry trade. Now, many may not know.
Why is the yen carry trade so important?
In the 1990s, that's when Japan went down to 0% and instituted QE. Americans don't seem to understand that Japan has had 23 steps in QE. Now they've announced openly an unlimited QE. What makes the U.S. better or different? Why is our QE the first time? When we had the first one in 2011, late 11, early 12, I said, okay, we can never stop this. Neither could Japan. You don't get out of this corner because what you do is you create these yen carry trade. You create carry trades. Now, the yen carry trade, in very simple terms, is, well, Japan in 1992 or so started 0%. So Wall Street said, hey, look, we'll borrow Japanese money and we'll invest it in treasury bonds in the United States. And all we have to do is make sure the yen does not go down. There you have it. Now, it produced like $1 trillion in profit every year for Wall Street and Japanese big banks. Well, okay, pay attention. You cannot have the yen go down if they're borrowing it to invest elsewhere in the carry trade. You borrow the yen at 0% and you invest it in, say, treasury bonds. You cannot have what you borrow go down in value.
Right.
Because your whole loan portfolio gets blown up.
Yes.
Okay, I heard arguments in the late 90s that the yen carry trade was all over. No, it's not all over until they stop QE. It's not over until they move away from 0%. The whole world's financial systems, financial players, the big players, are looking where they can borrow 0% money because it's free money. They borrow the 0% like in the United States and invest it in treasury bonds. So it's all within the dollar, and that's all well and good, and they are in the spread between the long-term treasuries and the short-term treasuries. Okay, sounds easy until the whole system breaks with the interest rate derivatives that are used and abused within that carry trade. We had in the late 90s and 2000, we had the gold carry trade. Borrow gold and invest the money in treasury bonds. But you can't have the price of gold go up. Well, it did. So that blew up the gold carry trade. They're in the process of blowing up the yen carry trade, which every major continent in the world participates in. At the same time, they're going to cause an Asian currency war. I'm seeing very big threats to the entire fiat currency paper regime here.
It can't be any other way, Jim, like from what you're saying here. It has to be, and I suppose that is the end game then, where they're going to let everything blow up, because what other way out of this conundrum is there? I don't see any. Do you?
Sure. Go back to the gold standard.
Well, that's not going to happen, though, is it? Not
No,
by
it is going
choice.
to happen. It is going to happen, and it's going to happen with an effing sledgehammer. And it's going to come out of Shanghai and China. Now, it may also come at the same time in China, Korea, and Japan, and Taiwan. What if they all announce simultaneously that they're going to work with Russia and come up with the BRICS gold currency, and suddenly Germany climbs on board with the Dutch? No, we get so many things happening at once right now. I truly believe this announcement by Japan of unlimited QE is going to start a tremendous chain reaction that goes totally out of control.
Okay, but if Japan decides to throw in their hat with China and Korea and go against the U.S., they can expect maybe another couple of Fukushimas, don't you think?
Yeah, and I'm keeping a close eye on what's going on with this President Abe, ABE.
Right.
He's an American think tank flunky. He's a U.S. puppet. He's called for a snap vote because there's so much controversy in Japan about the yen going down and their central bank announcing. You cannot have your central bank announce unlimited money printing to cover debt. You can't do that. So the whole financial structure and power elite in Japan is up in arms. I think they're going to get rid of the U.S. puppet called Abe. So we have to watch what's going on in Japan. It's very complicated politics over there. They're conglomerates. What do they call them? The Keiretsus. They have tremendous power. So when you tell them, hey, look, you're going to have a big benefit, your yen's going to go down and from all the unlimited QE, and you're going to get a big boost to your economy. That's what the American nitwits, the leaders, are telling the Japanese. You're going to get a big benefit. No, you're going to get a trade war and currency war with your neighbors. The Koreans and Chinese will not stand for this. They're probably having phone calls every stinking day with Tokyo. What the hell are you doing? Why are you committing harikari in order to save the US dollar? Let's all get rid of it together. Japanese are going to lose face with their Asian neighbors. That's what's coming next. This currency war is going to be powerful. The impact with the yen carry trade is going to be powerful. The impact on their banks is going to be powerful. The gain that they get in their export trade in Japan is going to come with a consequence of deep fury and anger with Japan, between Japan and China, and between Japan and Korea. This is kicking over a table, and when it gets kicked over, Europe's going to respond. They're going to say, wait a minute, we need to drive the euro down from 123 maybe to 110. That means the dollar goes up higher, crude oil goes down lower, gold goes down lower, and the entire market system breaks. Now, this is, I called it an end game last time we talked. And I'm saying now we're accelerating in the end game. This QE Unlimited in Japan and the demanded confiscation of their 1.2 trillion pension fund is a tremendous escalation in the decline, in the breakdown. Unbelievable things happening. I mean, the U.S. is really running out of devices to keep its dollar regime floating. I keep saying that the king dollar throne is broken. It's broken, doesn't have any legs left. So we're going to import a Japanese leg as we export QE. We didn't end QE. We're going to confiscate Japan's pension funds. I try to cover this in the hat-trick letter. I've got quite a bit in the Money War report. I've got a little bit more discussion in the gold report that's coming out tomorrow or Tuesday. A little more on the yen carry trade consequences, because when you come up with a first analysis of a situation, it's hard to think of all the different factors. But the currency war and yen carry trade are going to be the two big things right now that tear the system apart.
Well, what you're saying, it does make sense, so that this idea, because I was very suspicious when they announced the end of QE. I said that just does not seem possible, because when they're running like $1 trillion announced deficits, which mean that the deficit is probably even higher than that. And the whole world is viewing the dollar with such great suspicion, because they know that the policymakers have been up to no good. That it would seem very, very hard that they would be able to find buyers for all that without stooping down to some kind of sneaky tricks, as they have in the case of Japan. So that does make sense that this QE is still continuing. Is just is continuing in a stealth manner now. But again, like you said, it can maybe this will buy them a year. But what happens when the year is up?
We're not going to get another year. They've kicked the tables over. They're causing the yen carry trade to fold. They're causing a currency war. They're going to trigger a currency war in Asia. We're not going to get a year. They're not going to buy the year. They're not going to win the year that they bought. They're going to win an acceleration in the end game and an acceleration in the Asians' decision to get rid of the dollar and move with China and Russia and Germany into the gold standard. They're not going to get what they planned for. They can't do this. When they announced QE was done, I laughed. My first question was, okay, who's going to buy the 1.2 or 1.1 or 1.0 trillion dollar in U.S. government debt? Where's it going to be bought? They didn't address that. Why didn't they address that? Because this is part of their plan. They're going to steal, confiscate, seize, demand, commandeer, call it what you want, the Japanese pension funds. Now, I ask a different question. If they confiscate and commandeer, okay, I love the word commandeer because it has military implications. We should not forget that the United States defeated Japan in World War II and forces their central bank to follow our orders. They're not a free sovereign nation. And I'm hearing that there might be some parallel, although I don't want to get into it too deeply, with Germany.
Yeah,
They
that was
signed
going
a
to be my question next. That you talk about these vassal states, Japan being one of them, but for Germany too is in many ways also a vassal state. So can they force Germany to do something similar, like what Japan is doing?
well, I think they've done so with the Euro Central Bank. Now, the Euro Central Bank is a unique concept. It's a central bank for the European Union of 15 nations. Its headquarter office is in Frankfurt. And they've got a constant war between the Bundesbank in Germany and the Euro Central Bank in Frankfurt. A constant battle going on in the same country. Two central banks, one's continental, one's German. I don't think they can force the Germans to do anything with their central bank, because the Germans have a stiff spine and tremendous integrity when it comes to central banking and monetary policy. They've got almost like a sacred concept of the Buba. The Buba is their Bundesbank, their central bank. The sacred nature of the Buba is don't mess with it. Anybody in the German economy, in the German political structure, in the German chancellor office, in the German parliament, and especially the Americans and the British. Don't mess with the Buba. And right now the Germans are really pissed off that they ever joined the euro, because they've had to finance the debts of Spain, Portugal, Italy, Greece, the pigs.
Right.
They've had to devote over $2.5 trillion of their savings in almost 15 years to finance the debt of what they consider to be the lazy, corrupt, and broken southern neighbors. And I love to add this one point. The Voice pointed this out a year ago. He said, isn't it interesting that the solvent core of Central Europe, with Austria, Germany, and Netherlands, is Protestant, and the broken pigs of Portugal, Italy, Greece, and Spain are all Catholic? Now, I don't think corruption is something that Germans completely avoid. We're seeing a lot of corrupted political thought in joining the Russian sanctions ordered by the United States and the European Union. We got an annual report, earnings report by Siemens. It came out just a little while ago, a couple of weeks ago, I think. Maybe even a week ago. Siemens announced a big pullback in Siemens Russia, their subsidiary, down something like 20% in profit and 40 or 50% in orders. I don't have the numbers in front of me. That's based on my memory, so they're probably not right. But a big drop in orders in Russia and a substantial drop in their profit from Russia. So, gosh, their President Mueller out of Siemens actually made a statement that Germans must stick together and honor the sanctions against Russia, because Russia's a really bad country. They marched into Crimea and quit absolute piss ass nonsense. The United States mercenaries and Soros mercenaries marched into Kiev and caused a regime change, and all Russia did was hustle into their Crimean port to make sure that their only warm water port in the world is safe. So that earned Russian sanctions. Gosh, how about sanctions against the United States, Brussels, and Israel for what they've done to the Kiev government, ransacking their central bank of 44 tons of gold, ransacking their bank accounts with oligarch money of $70 billion sitting in Swiss banks, and wrecked the country. We're starting finally to see the finger of blame pointed in the right places for what's going on in Ukraine. But anyway, Japan and Germany and Saudi Arabia are three very important countries right now, because all three are going to turn to the Russia-Chinese axis. All three.
But isn't Saudi Arabia now again being a U.S. puppet and dropping the prices of oil and pumping up, ramping up their production and all that to bring the price of oil down?
Yeah, but I ask a tough question. Is that on the orders from China or on the orders of Washington?
Well, on the surface, it would seem that it's from the orders from Washington.
Well, I'm not so sure about that. I really don't know about that, because now we got some problems in the land of shale oil. We got a huge big bubble about ready to bust. It's called the oil industry junk bonds. To finance the shale industry,
Right.
big oil and mid oil, by that I mean mid-sized companies in addition to the huge oil companies,
Right.
floated junk bonds.
Yep.
They're the shale junk bonds. They're all going to blow up. So, did the United States ask the Saudis to lower the oil price so that they could harm Russia and at the same time kill off a segment of the U.S. oil industry? I don't buy this argument. I think it's a little more complicated. I think the Saudis announced, no, we don't want to have a loss in control of pricing. We are the price determiner, and we are going to lower the price so we can kill off some of our fellow OPEC neighbors, partners, like, say, Nigeria, like Angola, like even Mexico. And we'll be ruling the roost. And so what if we wreck OPEC? Because the United States has stolen all our gold in Switzerland. This is the Saudis talking. And we don't give a crap what Washington wants or thinks or orders us to do, because we've been having regular monthly meetings with China in Beijing, our new master. And I think China has gone so far as to say to the Saudis, you make nice with your playground enemies, the Iranians, or else we'll get really pissed off and we're going to slam your asses somehow. And it's not delineated how. Remember, starting in March and April, every single month, Saudi ministers and Chinese ministers have had summit meetings every single month in Beijing and Riyadh. They are the new masters of the Saudis, not the Americans. So the Saudis are realizing the petrodollar's done. We're holding too many treasury bonds. We don't know what to do with these all. And in May and June, the Saudis announced we're going to start a new sovereign wealth fund, going to be managed in Riyadh, Saudi Arabia, and be independent of our central bank. And the Voice sent me a message that said, wink, 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 where do you think they got their counsel? The Voice counseled them to create a sovereign wealth fund. And I said, sounds to me, and so did my colleagues, sounds to me, Mr. Voice, we have a name for him, but I don't want to say it. Sounds to me, sir, like the Saudis are getting ready to convert a lot of their bloated treasury bonds to gold because they see the end of the petrodollar. And he said, yes, that's correct. Obviously, yes. And I went further and said, is this model going to be copied by all the Persian Gulf Emirates like UAE? UAE's got the biggest of the sovereign wealth funds. Like Kuwait, like Oman, like Bahrain. Are they all going to start converting? Because I then added up in June, what's the total of all the sovereign wealth funds held by the Persian Gulf Emirates? And it's $2.2 trillion. And then I just kind of did some math and tried to get some educated guesses from some colleagues, and we kind of guessed that at least 60-70% of that is dollar denominated. So they might have quite a bit in U.S. big bank stocks. They don't own a single mortgage bond. It's against the Islam religion. So my guess is maybe close to $2 trillion in Gulf Arab reserves are sitting in treasury bonds. They're exposed.
They must be pretty nervous then if that's the case.
Yeah, and also the U.S. stole their gold in the Swiss banks. This is not in the news. When would you ever expect London, U.S., news networks to come out with a story that the United States Wall Street banks and London banks stole the Arab gold that wasn't protected in Swiss banks? We don't talk like that. We don't announce that Bill Gates and George Soros had an Ebola fabrication lab in Sierra Leone. No, we don't talk about these things. No, we leave that for the ignorant public to remain ignorant on. Why did they have a sudden attack on Credit Suisse in Switzerland? Because that's where remaining Arab gold is sitting. They want to fold it under UBS, where they've already stole the Arab gold. Most of what's going on in the world has a gold subtitle to the story, including overturning Muammar Gaddafi in Libya. Libya was just churning along rather swimmingly until NATO came in and blew his ass off and stole 144 tons of gold sitting in London. They're not going to get it back. Tunisia's gold, it's all gone. Syria's gold, what they try to do is create instability and force these nations to move their gold, and then when they're moving it, they steal the gold. Ukraine was a different story. We had mercenaries take over a fascist regime change, and it wasn't 2 weeks that the gold, 33 tons of gold in Kiev are gone. And now, finally, Kiev announces that their gold is
Gone.
pretty much all gone. They've got 1% of their reserves now in gold. The U.S. is causing problems around the world because they insist on maintaining their big banks and not liquidating them, and they insist on using military force to defend the dollar. And I said this back in 2005. The unspoken defending factor for the dollar is military, and it's probably going to get bigger. And now it's very big. We're destroying Syria right now. We claim to be bombing ISIS strongholds. Well, gee, I don't think granaries in Syria and supermarket distribution points in Syria are ISIS control centers. We're destroying the infrastructure of the economy of Syria under the smokescreen of attacks of ISIS. We've got this, the world is concluding that the dollar must go away. The whole world of responsible sovereign nations is concluding the dollar must die. The dollar must be replaced. We got to go back to the gold standard. We got to do it very quickly before the entire global economy is dead. You cannot keep rising in the cost structure without wages and prices keeping pace. You kill the profit structure, you're killing capital. The whole QE kills capitalism, not just capital.
So, but where is Russia in this, Jim? Why are they not coming to the defense of Syria then? Is it not in their interest to? Because Syria, they have a naval base down there. That's their gateway to the Mediterranean, isn't it?
Yeah, Paul, to be honest, I don't want to open up this whole can here of Syria. I know that I already did somewhat. Russia is allying with Syria. They have been for 2 years. They supply them missiles, they supply them military arms, they supply them aid. They supply them a lot of things. They are aligned with Syria. And that's why Syria is going to be such a mess. We're trying to interrupt the Iran pipelines from reaching the Mediterranean. That's why Syria is the focal point. We don't want Iranian gas supplying Europe any more than we want Russian gas supplying Europe. So we mess up Syria and mess up Ukraine. Now we're messing up Japan, and it's just not going to stand. This is going to get extremely out of control very fast. And that's why I point to the January February time frame. A common question is, when is this all going to fall apart? And I like to joke back and say September 2008. Where have you been? That's the month the U.S. dollar system croaked, died, had a fatal heart attack. Where have you been? No, this is all aftermath of the death incident, where you're going to get the, we've put the, what do you call it when you put those two big paddles on a guy's chest?
Yeah, when you give them.
Yeah, the electrical charge. Anyway.
Right.
Well, we've got that with 0%, and we've got a huge IV, intravenous, going into the arm. Uncle Sam's dead.
In our last program,
you
said that the dollar would rise, and then it would die. And yes, the rising stage we are now witnessing, and although people are rejoicing that strong dollar is back, and America is great once more and all that, but you don't see it as a sign of of recovery or of good strong times ahead. These are just symptoms that it is actually on its deathbed.
Yes, the higher dollar is going to kill the oil industry in the United States. Well, let's celebrate that. Wow, that's really great. You cannot continue to mess up every single financial market. Gold, treasury bonds, currencies, oil, they're all messed up. We're disrupting the entire global economy in order to defend the dollar, while we have a war in Syria to prevent Iranian gas from reaching Europe, and a war in Ukraine to prevent Russian gas from reaching Europe. We're going to force Europe to say F you to the United States. The only European allies that I think are going to remain are going to be England and maybe France and Spain. But I'm hearing that once Germany goes, France is going to go with it. There's some very interesting things going on right now inside Europe. I don't want to open up yet more, but we got the Swiss referendum. You've got the murder of the biggest French oil company executive.
Yeah, I read that Total CEO was, I thought he just had a plane crash.
No, a snowplow hit his private jet on the Moscow airport. A snowplow. I mean, the joke is that you're much more likely to be killed by lightning on the tarmac than you are a snowplow.
Right.
It's a murder. It's a murder because, anyway, these are all tangential stories. I don't know if I want to continue with
By the way, I just read recently that China and Russia are now even going more head-in. They're going, they're strengthening their trade deals much more, and that they have done a record amount of trading in their own currencies in the past 2 years now. And then they have announced these Western pipelines from the Western side into China. And then, of course, they have the ones that are on the Eastern side that have already been planned, are in the process of being built. So they are going, all in and doing much more trading and much more strengthening each other rather than being weakened, as we are told all these sanctions are going to do.
Well, right, and we forced a marriage. It's like the U.S. stepped in Ukraine, pointed a shotgun at the Russians, and resulted in a shotgun marriage with Russia and China. So U.S. held the shotgun for the marriage of Russia and China. What's the key part of all these Russia-Chinese deals? No dollar.
Yes, that's exactly. I read it's increased. Their bilateral trade in primarily settled in yuan is like gone up by 200 or 500% or something. That's just in the last year. It was almost non-existent in 2012, and since then it's just skyrocketed.
Right. So not only that, but at the same time, the Russians and Chinese are having a tremendous amount of infrastructure projects. And,
Yes,
you
yes,
know,
big ones, very big ones.
we've earned China a little discount on the gas that they buy because remember, we hold the shotgun. It's getting much, much deeper. There was a big news announcement just yesterday that I noticed. ICBC announced that they're going to open up a Chinese yuan trading center. I don't know if you can call it a full-blown RMB hub in Los Angeles. That's notably where the Long Beach port facility is located. It's the biggest West Coast port facility in the United States. So the Chinese own the port facilities of Vancouver in Canada and the Los Angeles port facilities. And now they've got an RMB center in LA to handle the trade. Just 2 weeks ago, China and Canada announced that they were going to do all of their bilateral trade outside the dollar and settle in RMB. RMB, for those who don't know, stands for renminbi, which is a Chinese word for people's money, which is kind of a slang word. It's not slang, it's kind of a semi-official slang word for their Chinese yuan. So, in the United States, we call the dollar the buck. It's kind of like the buck, but
right.
The buck is more slang.
Right.
In Canada, you got your loonie,
Right.
But
Yep.
the loonie is really for a specific coin. So what we've done in Ukraine is hasten the global non-dollar trade movement.
Now, when the U.S. allies like Canada and the U.S. Canada used to be the U.S.'s biggest trading partner for the longest time, but I think China now surpassed it. But then when allies like Canada go bypass the dollar. Now, that's not a very good sign for the health of the dollar and its future prospects, is it?
No, it's a death knell. I mean, it's like one of 50 different events you can point to because Australia did the same thing with China. All their bilateral trade is going to be settled in RMB. I mean, the Chinese opened up an RMB center in London, in Paris, in Frankfurt. I mean, it's going on and on and on. The dollar is being pushed to the curb, kicked to the curb in global trade. And the part that most Americans and Canadians don't quite understand is that when the dollar is not used in global trade to a significant extent, the global major banking centers, banking systems, will discharge their treasury bonds. They'll diversify out of them. I don't know what they're going to pick up instead. It could be more Chinese bonds, but it could also be gold.
Right.
They don't have a solvent core system, so they might seek one in gold. Now, Chinese government bonds to displace the treasury bonds, that sounds like a temporary device. But when these global nations get rid of more and more of their treasury bonds, it means the United States cannot supply its entire economy, well, 50%, from imports by paying with treasury bonds. That's when the United States launches the new currency that's heavily devaluated and causes significant price inflation on the import side. I mean like 200% in 3 years, 200% in 8 months, 120% in 6 months on the import side to the United States economy. So when the world stops using the dollar in trade, it sets a sequence in motion that will result eventually in the U.S. economy having to rely on a different currency besides the dollar. And that is a gigantic shitstorm. So it's all coming.
That's the Scheist dollar that you've been talking about for a while.
Yes, and when it's introduced, it'll have an immediate 30% devaluation, and I think followed by another 30% devaluation 6 or 8 months after that. So when you have 60% devaluation, look at that's a 40%. Wait a minute. Yeah, you're left with 40%. So 10 over 4 is 2.5. That's 150% price inflation from 2 devaluations on the import side alone. Imports. Now, the U.S. is going to get this benefit from the yen, trying to tie it back to the yen before we close. The yen is going to go down and down and down and cause a currency war. This is not going to be healthy. I don't expect it's going to get proper coverage in the U.S. press. I think we're going to see lots of unintended fallout, like Japanese banks being killed, and even maybe one New York bank that goes under because of Japanese problems. It could be the one with the biggest remaining yen carry trade exposure. They might still have treasury bonds on their books bought with borrowed Japanese money back when the yen was, say, 110, and now it's 85. So they got a 20% decline on their yen carry trade. These are all concepts that are, financial instruments, financial apparatus, mechanisms that are not in the news. And I try to keep a close monitoring of them in my work because they're trillion-dollar engines.
Right, they are. And what you're saying is logical, Jim. And the outcome, like the devaluation of the dollar and the introduction of a domestic dollar, it seems like a logical outcome if the world does turn away from the dollar. And there's no need to speculate on that anymore because it's happening right before our eyes. And we see evidence.
It'll get us martial law. The United States will earn martial law from all this.
I guess Ferguson, Missouri is a preview of something that may be in store for the whole country in the future.
Yeah, and if anyone thinks that's all spontaneous and natural, I think you've got rocks inside your head. These are staged events by our FBI.
Totally staged, and then they go ahead and shoot another kid in New York for no reason. So I mean, there's some kind of provocation that's or a race war that's being incited, and then Obama goes and does all this amnesty by fiat and by executive order. So they are definitely inciting. That they're not trying to alleviate the problems; they're trying to exacerbate them. So you're right that martial law is indeed a very, very high probability, if not a certainty.
So who would be the Lord? Who would be the dictator?
Well, it's not going to be Obama. I'm sure there's somebody else waiting in the wings.
I don't know what it's going to be, and I don't wish to speculate here. But
No, we are just talking about in general about what's going on and what we can offer some speculation because it's not that speculative. It seems actually quite apparent.
No, we're going to get an advancement in the U.S. police state. I mean, a funny question that I examined back in 2000 was, what's the definition of a police state? When I heard that, well, it's 20% of the population being part of the military or the police. And I don't know if the United States fits that criterion right now, but
that's a good definition. I've never heard that before, but man, if the United States does not fit it at the moment, I think it's pretty close to it.
Well, when you count police, it's city police, it's state police, it's federal police, it's FBI, it's CIA, it's Treasury Department police, and all the covert types. I don't know how you count them. I mean, it's impossible to count the U.S. police force.
Well, you got the IRS, you got the Homeland Security, you got FEMA, you got, there's so many different. Police doesn't just mean the guy wearing the blue or black uniforms. It could be many government people who have authority that they can exercise. It could be the health police. There's many.
Exactly.
Right.
It could be Food and Drug Administration.
Yep.
It could be the security force for Monsanto. I mean, we can get carried away here. But, there's another definition that's not exactly for police state, but for a socialist state, and that is what percentage of your workers belong to the government. And the U.S. just flies off the handle on that one. We're way up there. We're a socialist nation, and I just see a lot of acceleration, Paul, in what's happened in just the last few weeks. I think we're going to get some breakdown between Draghi and the German central bank, the Bundesbank, very soon. The Germans do not tolerate any screwing around with monetary systems, and they're very angry about what's going on with the euro. They're very angry about losing a lot of their, they're not going to get back their $2 trillion in savings with the pigs nations. They're trying to, seize collateral, and it's causing tremendous problems. Look at all the problems you get in backlash when the Greeks fall down and lose their assets to the Germans. The Germans are painted like Nazis in the Greek press. Well, they're the bankers that financed a system, and the loans were defaulted upon. What do you do with that? You forgive it and say, okay, well, the hard-earned German savings just goes down the Greek toilet. Things are not simple like that. I don't demonize the Germans for trying to grab collateral on the failed debt to the pigs nations in general. That's why I think the pigs nations are going to break away from the Central European nations. And I think I've been told this. I've been told it already numerous times. The Germans are going to side with Russia and China with the BRICS gold-backed currency used in trade. By that I mean gold trade notes as a letter of credit. That's the device that's going to bring about the great change. And, we're seeing a lot of different events in the background for the BRICS to source their central bank gold. That's what I think the Brussels bulge, the Belgium bulge was all about, with $400 billion in treasury bonds sitting there. That's waiting to purchase gold for the BRICS. Maybe not entirely, but a big part. So,
when is the BRICS Bank? It's going to be operational very soon, isn't it?
Well, there are two banks. One's a development fund, and it's been funded with $100 billion, maybe half that, but pledges for the rest. And the other one is their contingency fund, which is, think of it as a crisis fund. Like suppose the Chinese stock market has a big hiccup, or maybe the Thailand or the Korean stock market has a big hiccup. The $100 billion contingency reserve account, the CRA, I call it the crisis fund. The crisis fund will be drawn upon and help those financial markets, whether it's for currency or for stocks or for sovereign bonds. Those are the three: currencies, stocks, and bonds. So the BRICS are already creating their funds. That's why you don't hear much about the IMF. The IMF is gone. It's defunct. It's dead. It still has an office and still has a little witch named Lagarde. I heard rumors she's a man. That's a nice note to close on, Paul. I really must go here, but
okay, Jim. Before you go, can you answer one quick question?
Sure.
This is something I read somewhere, that they have proposed an alternative end game scenario to what you're proposing here, and they say that what's in the works is a debt jubilee, where basically all debts are going to be reset back to zero. Everybody's going to forgive each other, and we're going to just, everybody's going to live happily ever after. Do you anticipate or see even a remote possibility of that happening?
Well, I've got an opinion on it, but it's kind of flip. I think if that happens, the President of the United States is going to be the Easter Bunny, the Vice President is going to be Peter Pan, and the Finance Minister is going to be Mr. Magoo.
Okay.
I prefer to live in the real world, and
Well, in this time, like especially with the internet, there's so much information that flies around. Sometimes you just have to wonder. But at the same time, strange things sometimes do happen, and that scenario with the debt jubilee actually doesn't sound that bad of an option to me. But I am of that same camp as you that what do they say about a snowball's chance in hell and all that kind of stuff. So I don't see it happening either.
Well, what are we going to see? A new program initiative across the world where all the worst offenders of debt are going to get get out of jail free card? The biggest benefit will go to the worst offenders. I don't know of any system that is based on that kind of upside down rule. Now, what I think is going to happen is a gigantic default across the entire world. No, I should be careful here. Across the entire Western world, I think we're going to see lots and lots of big banks go down in the next year or two. It could happen very quickly. Big banks are going to go down. The dollar is going to be defaulted upon and replaced. A tremendous amount of U.S. dollar-based wealth is going to suffer and endure write-downs. Sovereign debt is going to default all over the place. I mean, like French and British. U.S. government debt is going to default. And bondholders are going to be redeemed on 30, 40, 60, 70 cents on the dollar, depending on how pathetic the situation is. I think we're going to see a gigantic liquidation and default scenario take place sometime in the next couple of years, maybe sooner. Hard to put a time frame on it. Now, debt jubilee, I'm sorry. I can't see that happening on the planet Earth with humans occupying it.
Okay, Jim, since you're the golden jackass, the last word, what do you have to say about gold right now? What's happening with it?
What I'm hearing from the voice, this is from direct large purchases of gold. He said for large purchases, and I tried to quantify, I said, you mean like $20 million worth, $50 million worth? He said, yeah, you got the right idea. Very large purchases, like $20 and $50 million worth. The price premium paid on actual physical purchases is between 30 and 35% minimum. Minimum. So what's 30? That's like $300 or $400. So the
that still seems like a bargain to me.
Well, it may be, but the important point is to focus on the premium.
Right.
The premium is way up from zero. I mean, we were talking about, oh gosh, the Shanghai premium is down to 3%. No, what he's saying is that a lot of Asian-based purchases of very wealthy Asians, often happening in Hong Kong with intermediaries in Dubai, 30 to 35% premium. We're talking about a $1,500 gold price minimum. And then he went on to say, Jim, don't publish this, but there are cases that are higher. And I don't want to say any more, I don't want to violate our trust, but I used a key word there, minimum of 30, 35% price premium on gold purchased in large volumes. And he said it's even bigger for silver. So, what's the price of gold? I don't give a rat's ass, a backward flying goat turd, what the COMEX price is for gold and silver. I don't care. I don't care. Why? Because they don't have any. You can't set price when you don't have any. I look to the centers of the world that are doing significant transactions in gold and silver on a physical basis with airlifted, ramped gold coming in with security guards, not electronic dumping exercises in New York and London. Let them defecate elsewhere. I don't care what they do in their COMEX and LBMA. I don't care about their defecation centers.
So, Jim, what you're saying then is what one can conclude from this is that the supply has to be really tight if people are willing to pay 35, 40, 50% premiums on the posted price.
No, it's worse than that. The supply is non-existent at the current price.
Well, that's good news for people that are holding gold then, isn't it?
Yes, if they have the sense not to look at the COMEX price. And I don't think a lot of them have the sense not to look at the COMEX price.
I stopped doing that a couple of years ago.
Well, good for you. So did I. I stopped in 2012. There's a final point I'd like to make regarding the gold price, and that is the gold forward rate. Think of it as the meter on backwardation. Typically, 3 months ahead, 6 months ahead, 9 months ahead, 12 months ahead, the gold price ramps up. Now it's ramping down. So what they're doing is they're pulling all kinds of gold out of future sources to handle demand at the present, here, now, at spot. We got a backwardation of the gold system. We got acute shortage. There's virtually no supply at the current prices. They haven't had a gold delivery for the COMEX futures since June of 2012. It's not a gold market. It's an alternative universe where they defecate on the floor and people pay attention to the defecation. I don't pay any attention to the COMEX. There was a time a few months ago, a client said to me, Jim, what do you think of the gold price? And I said, well, I'm not sure. What is it? 1,100, 1,200, 1,300, 400? I really haven't noticed. And they said, what, you've got a newsletter? I said, yes, I follow the gold market, not the COMEX.
Yeah,
COMEX is not a gold market. It's going to become a cash and carry market where eventually they don't even have cash and carry because they don't have any gold. They're going to run out of gold to raid from the GLD fund. Right now they're raping and pillaging Scotia Mocatta. More open topics here. I think there's an effective zero for the GLD fund, also known as the SPDR Gold Trust. I think there's an effective zero somewhere around 700 tons, 650 tons. The rest is mythical. It's gold in motion, gold from the mining companies that are heading to refineries, heading to clients, heading to the COMEX. Gold in motion is maybe 650 to 700 tons out of GLD. GLD is a very funny, clever, fraudulent fund. Imagine you got a lot of gold that's in motion from the mining industry. Well, gee, wouldn't it be nice to have a value on that? Well, they did. They started the GLD, but they also had some gold, and they're raping and pillaging that. I think GLD gold is now being shipped to Shanghai to satisfy intense Asian demand. Shanghai and Hong Kong.
And I also heard that in Japan demand is quite strong, and of course India is always strong. So it's about Japan. I believe Japan demand has gone up since they've been having these problems with the yen.
Yeah, when you announced unlimited QE in Japan, you immediately started a gold fever in Tokyo and all across the country. So, well, I hope people visit the Golden Jackass website. There's free material there, links to our public articles, links to these interviews, and an invitation to join the newsletter, which is a paid newsletter that I've been engaged in for 10.5 years now, and it's a labor of love. It's a lot of work, and my inbox for the email is really quite a research tool. I've got dozens and dozens of people sending me things, and it's great. I do my own research, but I also talk with my sources, my colleagues, and we pass a lot of information back and forth. And really, my inbox is incredibly rich with a lot of stories. And this morning, the big story was ICBC Bank of China opening up a Los Angeles RMB center. And I'd like to know whether it's going to be a full-fledged trading hub, which means they sell Chinese RMB-based bonds and convert Forex currency. So
well, yeah, since they're going to have a hub in Toronto and Vancouver, I guess maybe they're just going to be linked up with that. And even if they're not going to do the full-fledged thing, at least they'll be handling, some of the transactions down there.
Is it possible to have the Chinese RMB center in Los Angeles? Is it possible to have it farther from New York?
not in the U.S. It is not.
Okay, so that's a message too. I wonder if there's going to be maybe a RMB center in New York someday. I have my doubts, but maybe there'll be an RMB center in.
Well, when they've already bought the Chinese have already bought the J.P. Morgan building, haven't they? So,
that's exactly what I was going to say. Maybe the RMB center will be in the former Chase Manhattan headquarters.
All right, Jim, I appreciate you taking the time to come on and update us. It's been a while, and it's been really informative as usual. And once again, your website is goldenjackass.com, and I want to vouch for your newsletter that it is encyclopedic in the amount of information that you put in there. I would highly recommend it to everyone. Thank you again, my friend. You have a wonderful day down there, and again, come back anytime you like.
Looking out my window, the sun shines up above. Now I'm free from sorrow, 'cause I have found God's love.
The birds sing their song this day.
The sweetness of the sound.
This is when I begin to pray.
For those who need to be found, oh, sweet Jesus. Lost souls cry every day. Use me as a witness to show them the way.
Please show them the way.
Show them the way.
Please show them the
Walking out my back door, the sun drops behind the trees. Someone whispers out low, a message felt from the breeze.
Your life's an example